Hello students, welcome to CivicCentre IAS class. As part of daily economy series, in this class we will discuss about a recent RBI decision, especially under its internal working group for the ease and smooth monetary policy transmission. So let's try to understand what is this all about. What is monetary policy? Monetary policy is nothing but it is a policy especially developed by Government of India in consultation with RBI for the 5 years. What was the target? Inflation target 4% plus or minus 2% is the inflation target, retail inflation. And at the same time, RBI Monetary Policy Committee has 6 members, 3 members from RBI, 3 members from Government of India. What was the major purpose of this RBI monetary policy? Monetary Policy Committee will decide the benchmark interest rates, nothing but your repo rates, reverse repo rates and other liquidity adjustment facilities, so that it can have a smooth transition in Indian economy from banks to borrowers. Each and every decision that has taken by Monetary Policy Committee will be reflected in your borrowing, right? So that is the purpose of this Monetary Policy Committee. But from 2020 onwards, Liquidity Management Framework LMF was in place. What was the purpose of this liquidity management framework? The availability of money or supply of money with the banking system, how it will have a effects on both economy and at the same time as a individual persons. That's why the RBI has constituted a committee, internal working committee, internal working group. The main aim of this working group is how to control this liquidity management framework and at the same time how to run liquidity in a smooth way, so that each and every sector will get their liquidity facilities. So that is the discussion for today's class. So RBI's recommendations on liquidity management framework. So there are some recommendations that have been given by this internal working group. The first one is WACR, weighted average call rate. That is nothing but weighted average call rate as the operating target. Nothing but when it comes to deficit of funds, especially between the banks, what they will do? They will do call options for 1 day to 7 days or 14 days. So obviously the internal working committee, internal working group has recommended that weighted average of call rates that should be taken, so that the liquidity in the banking system will be easily flown. That is the first one. That is the operating target under which weighted average of call rates should be taken, so that from one bank to another bank, if there is any deficit in the funds, then obviously this weighted average will be taken as a operating target. That is the first one. Second one, discontinue the 14-day VRR and VRRR auctions. So under liquidity adjustment facility, there is a repo rate, reverse repo rate, and under the CRR and SLR, what generally RBI has to do is whether it will be increased or decreased. But under variable repo rate and variable reverse repo rate, it will be determined by demand itself. Here the RBI does not fix any targets. Under repo rate and reverse repo rate, RBI will fix the interest rates. But under variable repo rate and variable reverse repo rate, obviously the RBI does not fix any interest rate component on the banks, so that the demand for money itself will decide the interest component. If liquidity is heavily available in the market, then obviously interest rates will be come down. If liquidity is very tight in the banking system, then obviously you can expect a interest rates hike in the banking sector. That's how it will work. Next one, advance notice for repo and reverse repo operations. Generally, repo and reverse repo operations will be carried out 1 day prior advance. 1 day prior to the auctions. Even this internal working committee has recommended that you should not give 1 day advance. You can do on the same day itself. Whenever RBI has conducted repo auctions or reverse repo auctions, obviously you can take the decision on the same day itself. You should not wait for the 1 day advancements. What was the rationale behind this decision? Because if 1 day advance, if decisions has to be announced publicly in the market, then obviously the market conditions and liquidity flexibility will not be as might as you expect. That is the reason. So on the same day itself you can take the decisions. Minimum CRR requirements. What is the CRR? Cash reserve ratio requirements. Whatever the bank deposits, that obviously the banks cannot have powers to lend all the deposits to the lending. So obviously CRR requirements are there. Cash reserve ratio. 95% of their net cash reserves should be kept with banks itself, so that it should not depend upon any call money markets or even from RBI under standing deposit facility. So obviously the availability of liquidity in the market will be very high, so that the interest rates will be minimum. So these are the recommendations given by RBI on liquidity management. The simple understanding of this concept is nothing but how liquidity will be managed across the banking sector, from RBI to banks and banks to remaining consumers or borrowers. So that is the discussion for RBI's monetary policy recommendations, especially given by internal working group. So you need to understand about what is the monetary policy. Second one, why monetary policy transmission failed in India's banking sector especially. And third one, what are the recent decisions taken by internal working group that will be applicable in coming months. These are the recommendations given by internal working group. So that is the discussion for today's class. Thank you for watching class. Have a nice day.